As you know, today the board decided to leave the cash rate unchanged cash rate target unchanged at 4.35%. The cash rate has been increased by 75 basis points since the start of the year. These increases are tough for households with mortgages, who are also facing high inflation, but they are necessary to slow demand to make sure we get inflation down. I want to be very clear that inflation remains too high. Leaving rates on hold today will allow the board to assess how these previous increases are flowing through the economy. Overall, the flow of data and developments since May have been broadly consistent with our expectations. While we've seen weaker consumer sentiment and business confidence, spending and investment have not softened materially. We've also seen conditions in the housing market ease in recent months. Although that only partly reflects, we think that probably only partly reflects tighter monetary policy. It will take longer for the full effects of the recent tightening to flow through the economy. Reports that an agreement has been reached to end the conflict in the Middle East are welcome. If the conflict does end and the Strait of Hormuz is reopened, this should support the flow of commodities and lower prices. But this could take some time, and an orderly resolution is still not assured, meaning there are still upside risks to inflation and downside risks to growth. It's important to bear in mind that we were dealing with capacity pressures before the conflict started. And although oil prices have eased in recent weeks, they remain high. We have seen some signs that higher costs are starting to be passed through to the cost of other goods and services, including new dwellings. This was expected, but it is important that these effects are limited. If expectations of higher cost growth get embedded into price and wage setting decisions across the economy, this would lead to even higher and more persistent inflation, and it would require even more tightening in monetary policy to get inflation under control. Today's decision does not rule out further tightening in monetary policy if that is what is required to bring inflation down. In making its decisions, the board will be focused on the data and what that suggests about the outlook and risks. Again, I understand that this is a difficult period for all households. That's why it's so important we get on top of inflation now. High inflation hurts all Australians, especially the most vulnerable.